Hello to all the Web3 enthusiasts out there. This is Max speaking, and welcome to the new exciting episode of Synopsis Talks. Or actually, this one is going to be a Jupiter Talks. Because our today's guest is this charismatic gentleman in front of you, please meet Kash Dhanda, the cat herder at Jupiter. Hi, Kash. How are you today?
Thanks so much for having me on. Thanks for having me on, buddy. It's a pleasure to be
Yeah,
here.
so I see you in a good mood, and we had this small conversation, and I believe this discussion is going to be hot and insightful. So everyone, just get ready, and we're starting. A bunch of questions I have for today, so let's get straight to the action, but with a little warming up with the introduction. So since it's your first time at Synopsis, could you please tell us the story of how you joined the Web3 industry?
Yeah, so I first got interested in crypto back in 2016, I think it was. I had come out of college a few years before that, and in college, my kind of concentration was in postmodern political philosophy. And so I'd spent a lot of time thinking about how people kind of organize, how power is distributed, how kind of systems levels and how states can work. And then in 2016, I read the Ethereum white paper. I think in the first paragraph, it talks about the idea of DAOs, of these decentralized autonomous organizations, and the way that they can change the world and whatever else. And I was immediately nerd sniped, right? So I got into the game back then, very quickly lost a bunch of money and realized that, the DAO vision is probably a little bit further away. The DAO hack, for any of your viewers that were around back then, I think happened just like 2 or 3 months after I got excited about Ethereum. But it was still like really interesting. That was just kind of like the way I got sniped in the initial parts. I was trading, keeping up on the technology side, shilling it. I had little WhatsApp groups with friends to tell them about developments, all that kind of stuff. But it wasn't until 2021 that I decided to go full time into the ecosystem. At that point, I had a job offer on the table to be an entrepreneur in residence at a big bank in Singapore, where I was based at the time. And I was telling, a good buddy of mine named Akshay BD about the job. I was like, hey, what do you think of this? Should I do this? And he kind of grabbed me by the shoulders and was like, what the fuck are you thinking? There's the swearing. I told you what happened. But he was just like, what are you doing? All we do is talk about crypto. Let's go do something in crypto instead. Like, don't go work at a bank. And that was the real way that I got in. So a little bit of luck from a good friend kind of pulling me in.
Wow, awesome. A great story, and thanks for sharing. So 2016 is way ahead of the crowd, I would say, and you made a great path here. Awesome. And the next question also about choosing the path. So out of so many ecosystems, chains, and other things happening in Web3, why did you choose the Solana ecosystem?
I'll just be very honest here. I don't know if I've said this like in an interview. I did not choose Solana for any high-minded, super strategic reasons, quite honestly. Akshay at the time had been doing some work in the Solana ecosystem, and that's just kind of like where the opportunity was. It was not clear or evident to me how I could kind of get involved in any ecosystem at the time. I had 50 Twitter followers. I didn't know anybody in crypto. I was just like some random guy, right? And so the fact that he was doing wanted to do something in Solana, and the Solana Foundation was willing to support, so major shout out to them, just made it the easiest place for me to get onboarded. I will say what sold me on Solana. So the reason I'm on Solana is accidental, nearly. It's like as much an aesthetic choice as anything else. But the reason I stayed on Solana and kind of said yes and got excited about it was really because at the time in 2021, that's where all the smartest devs I knew were kind of interested in building. And so you're seeing this real massive influx of talent at the time. Now, just to put a little historical context on this, Superteam, which was the organization that Akshay had gotten going and that I joined as Sherpa, was started when Sol was at $180 in token price. It had already gone up to 210, then it was at 180. And then Superteam, from the day it started at 180, Sol only went down. And so we were there all the way until $8 and then all the way back up to $180 on the other side. So it was really the reason I had conviction to stay throughout this down only period and this very painful trudge upwards was just because of the quality of the builders out there. I think of these ecosystems largely as cities, right? And cities work best when they're able to attract high quality talent that is able to contribute to the city's ongoing growth. And it just seemed like the massive influx of talent was Solana.
Oh, awesome. Thanks for sharing and putting the things straight. And we're moving to the actually main part, the main dish, discussing the Jupiter and things associated with it. So since you're one of the, I would say, most energetic guys in the system, putting so much effort for everything to work great. So the first question would be, what is the best compliment Jupiter could receive from your perspective?
That's a great question. I would say the best compliment, honestly, would be that we are responsive to feedback. I think much more so than most other protocols, we have like a real emphasis on feedback. We have like a 6-person support team full time, which I think is pretty rare in DeFi in particular. And we have this whole public feedback board and so on. And so we really, I think, we're okay at kind of like initial products. Like we can do all right, but we really don't have too much alpha versus like other teams there. Where we kind of stand out and where the alpha comes from is our ability to iterate really quickly while listening to users. So if somebody said like, "Hey, this is the thing that I love most about Jupiter," I'd be like, great, okay, they're seeing the effort kind of come to fruition here.
Yeah, the effort is visible, really. And okay, moving on. Could you please tell us your vision of how the launch of Jupiter Land go, and if you can name the things you feel least and most satisfied about it?
Yeah, for sure. I will say that Jupiter Lend is our borrow lend protocol built in collaboration with Fluid from the EVM side. It's, I think, the first time ever in history that 2 top teams from 2 different ecosystems came together on a product like this. And my response to it was like, holy shit. I was like totally blown away. I think we were internally thinking that our public beta would come out, which started about 2 weeks ago at the time of this recording. Our thought was like, hey, we maybe can get to like $250 million in supply in the first month. If we get to 500 million, clear success. And if we can get to 1 billion, wow, how crazy in a month. We hit 500 million in the first day, and we hit 1 billion in 8 days. And right now we're at like whatever, 1.2 billion or something. So it's been like remarkable and overwhelming to see how much people have loved the product. And so, yeah, surprise is probably the biggest takeaway that I have from it. It is novel in its architecture relative to anything else on Solana. It is much better for borrowers, and it is much simpler for lenders, which explains why it got so much traction so quickly, I think. But yeah, I was really not expecting it. So very grateful to everyone that gave feedback during the private beta that we had, where only a few people could use it and so on. What I like most about it, I think the thing I'm most satisfied is the quality of the assets that we have and the number of, actually, I'll tell you what, the thing that I'm most satisfied about is the way that it kind of grew the pie on Solana. You see, when we announced this product, I announced this on stage in New York maybe 3 months ago. And the number one kind of response from the community was, look, Jupiter is now going to compete and fight with XYZ protocol, some of our competitors on Solana who I won't name. They're just going to try to like fight over the same pile of money, right? And maybe they'll be able to pull off $1 billion in TVL. In the first week, I'm like delighted to say that our competitors' TVL barely dropped. 2-3% maybe. Almost all of the liquidity that was added to Jupiter Lend is net new to the ecosystem. And that has been like remarkably satisfying to see that the entire scope of Solana DeFi is getting bigger because of Jupiter Lend rather than us just kind of like attacking each other. That's been really cool. The thing I'm least satisfied with, I mean, that's a very long list, actually. There's a lot of stuff. It's an early product. It's like 2 weeks old, and it's gotten way more attention than we expected. So if I had to pick one, I would say the multiply limits are not as high as I would like. So right now, in a single transaction, multiply, for people who don't know, is a way to get leveraged exposure to a particular asset. So you take JupSol, which is the highest performing LST by Jupiter, of course. It's the highest performing LST by anyone, but we make it on Solana. And it normally pays 7.7% or something like this. You can leverage it up with one click using a multiply vault, and then it can get up to whatever, 35% on Solana. The problem is right now on Jupiter Lend, as we're recording this, there's a limit in size. You can only really do that up to about $100,000 of collateral in a single transaction. And that drives me nuts because I have so many whale friends and institutional funds that like won't use the product until those limits get up. And so it's kind of bottlenecking our growth. I know it's like a minor technical detail, but it's very frustrating for me.
Well, sounds great. And be not afraid of mentioning that there are many things that you are not completely satisfied with. Is just showing the passion and the ability to see the things clearly and improving that. Sounds awesome. And You also touched the ground about the supply. We'll speak about borrow rates and supply rates a little bit later. And another thing I would like to ask about now is the short and long-term goals of the Jupiverse. Can you please tell us about them?
Absolutely, yeah. So the Jupiverse is kind of what we refer to as like everything under the Jupiter umbrella. So of course the Jupiter product suite, people can see at jup.ag, but we're also the number one, not just product on Solana DeFi, but also the number one platform. Excuse me, we have many partners who build on top of us. We have Moonshot in the portfolio, Drip, and a bunch of other companies as well. I think the short term goal is really to kind of fill out what we call the DeFi super app thesis. So our very strong belief is that especially as the industry matures, users are not going to want to hop around to 10 different protocols to accomplish 10 different things. Instead, there's going to be compounding returns to protocols that have a comprehensive product suite and have built up a lot of brand trust and a lot of loyalty. And there's ways in which these different products can actually supplement and complement each other as well. And so in the short term, we just need to kind of fill up the places that we were missing. Lending was the biggest obvious gap, right? DeFi, one of its primary exports is yield. And there was no way to get yield within Jupiter until 2 weeks ago. But there's still some other gaps, right? NFTs are a very notable gap. Whatever you might think about, how the market for NFTs is, there's no question that they're a critical part of DeFi, both from community creation perspective, but also for RWAs, for things like tokenized real estate and so on. And so we need to have a much stronger muscle on the NFT side. And there's a few other things that I can't share too much about that we have in the works, largely around payments in particular, that I think are really important for any DeFi super app to have. That's the short-term goal, have a comprehensive offering. The long-term goal is really to onboard, it sounds cliche to say it, but to onboard the next billion people. A lot of people say that, and I know that's why I kind of cringe even as I say it here, but the truth is, Jupiter has a proven track record. We are, the most used product on Solana. We have number one by TVL, number one by volume, and these other metrics. Metrics can come and go, but like what we've been able to show is that we operate at scale. And I think we are in a real position to help be the tip of the spear to onboard more people to crypto in a safe, trusted environment with one product that gives them everything they'd want. So the tagline that we use now is we're not done building until the entire world is saying like 3 words when they talk about crypto, just use Jupiter. And that's really where we're heading, I think.
Wow, sounds great. And the next thing I should have put it maybe after the previous question, but decided to put some things in between, not to make it sound too sweet. So, but could you please tell us what do you personally consider the biggest achievements of Jupiter before and after you joined in?
Well, I joined in January. So I was an advisor to Jupiter last year, but I only joined full-time in January. And the company's been around for like 5 years. So there's many more proud accomplishments from before I joined than after I joined. I've only been here for a little bit. But beforehand, I think that reaching the $2 trillion mark in terms of total volume is like a major accomplishment that is not very common. There's not a lot of protocols that have done that. Jupiter, I think nowadays is at like 2.7 trillion or something, but that milestone was pretty big. Definitely very, very proud of that. And then I think the other major one is the perps product that we have on Jupiter as well, which was built in within just a few weeks basically, and very quickly became the number one perps product on all of Solana and a major revenue driver for the company. So those two achievements on the DEX aggregator side and on the perp side are huge. If I can throw in a third one, actually, probably the most impressive achievement of Jupiter was surviving, right? So Jupiter actually kind of was born out of a failed company called Mercurial. This is a not so well-known piece of lore, which was a stablecoin swap, kind of like Curve is on Ethereum. And it just wasn't working on Solana, and all credit to Meow and Siang, who are the co-founders of Jupiter, who kind of sensed that it wasn't working and decided to pivot into a different company called Jupiter, which was this DEX aggregator. That's probably the most impressive thing, I think, to really have your back up against the wall, feel as if you may or may not make it, and then take the difficult but decisive action necessary to build something great. I don't think there's a lot of founders who are able to do that successfully. And so, Meow and Siang deserve all the credit in the world.
Wow.
Since I've joined, oh yeah, I mean, that's beforehand. I can give one since I joined as well if you'd like, but the ones beforehand are the big ones.
Oh, yeah. So putting the survival as one of the biggest achievements is kind of a very interesting point of view. And I believe that many people in the industry are missing this because there are like millions and millions of projects happening, and becoming the tier one is coming after surviving the first times and turbulence. So sounds great. And this was about the biggest achievements. And what about the biggest innovations of Jupiter that many people may overlook? What is the underestimated part of the story?
Oh, there's a few there. They get a little bit more technical, if that's all right. But a lot of them are specifically on the routing side. So, what Jupiter was able to do on Solana is underappreciated, right? It turned Solana into this meritocratic DeFi ecosystem. Because Jupiter was aggregating all the liquidity and all of the routes and had this incredible routing technology before anyone else did, it was able to ensure the traders always got the best execution price, and liquidity providers or DEXs, whoever was kind of housing that liquidity, could innovate on their own models in order to kind of like deliver more efficient prices for trading. As a result, this is like because Jupiter existed, you saw a bunch of other innovation able to take place, and I think that that's actually the leverage point that Jupiter added. So, as just one example, currently on Solana, the major trend is proprietary market makers, right? These kind of non-public AMMs that are doing actively managed liquidity instead of passively managed liquidity on a traditional DEX, and they're bringing spreads and bids tighter and tighter and tighter. They have no front end, right? You cannot go and use them. You have to go through something like Jupiter to use them. So enabling that innovation, I think, is really important as like a high level point. Within our own technology, there's a bunch of things. I think real-time slippage estimation is like incredibly difficult. We look at all the transactions that are happening all across Solana, see the prices and the slippage that they're executing at like in the literal second before your transaction goes through, and then automatically apply the right slippage so that you don't have to worry about it and so that your transactions go through. That's an incredibly difficult data problem to solve that our engineers did. And that's just like one recent example, but there's many, many more after that as well.
Wow, sounds like a great contribution to the entire ecosystem and probably the entire industry. That's great. And the next small question, maybe kind of a random topic in between. Could you please tell us what the cat narrative around Jupiter is all about?
The honest answer is I can't really, because I don't fully understand it myself. It's one of those things that just kind of evolved, I guess. So the co-founder of Jupiter is a guy named Meow. Meow is not his real name; it's his kind of pseudonym.
Right.
But cats say Meow. Meow himself does not have any cats, but I think he likes cats or something. And I think it just kind of started from there of being like, oh, this could be the kind of imagery and the brand association is this space cat that comes in. And so as a result, we had a community conference. It was called Cat Istanbul because it was in Istanbul and we're all cats. My job title is cat herder. Members of the community are called cat debts. There's a lot of like cat-based puns. Like our internal tipping system within our Discord is called the appreciation system instead of the appreciation system. And I think it really just stems from Meow's name, honestly, and his own kind of like interest in cats.
Okay, got it. Can't say that everything is completely in order now, but more understandable. Okay, thanks. Yeah,
There's not like a good logical explanation for it. It's just a thing that happened.
yeah. At least there should be some fun in all of this also, and if it's evolved somehow into this, why not? And we continue evolving our discussion, and the thing which was mentioned in the beginning. So could you please tell us why is the borrow rate lower than the supply rate on Jupiter land? How will it generate revenue actually?
Yeah, so it'll depend on the specific pool. But what you'll see in a bunch of different pools is these incentives that we're adding in and that our partners are adding in as well. Since Jupiter Lend is so new, we need to ensure, well, let me say it like this. Any borrow lend protocol has this kind of two-sided marketplace problem. You need lenders to give money, you need borrowers to want the money. Without any lenders, you have no borrowers. And if there's no borrowers, then the rates are bad and then no one wants to come and lend, right? And so you have to kind of bootstrap that liquidity somehow. And the way we do that is with incentives. So on Jupiter Lend right now, I think that the kind of natural rate for USDC lending is something like 3.5% or 4%, right? The truth is that 4% yield on USDC is not enough to get people to move their capital over, because you can get 5% or 6% elsewhere, probably usually around 5%. In our case, we said, all right, well, let's juice it in order to get the liquidity over. So you get 4% from the borrowers, they pay you 4% directly, and then the protocol itself, through incentives, through a collection of more than 10 partners, will give you another 4%. So you end up getting 8 to 10% on your stablecoins right now. That's going to continue for the next 3 months while we build up the liquidity on the protocol. The advantage is, if you're a lender, you get higher rates, right? And we're basically helping to subsidize those rates. But if you're a borrower, the great thing is your rates of borrow are extremely low because you don't need to pay the lenders as much to bring the liquidity. We're handling that for you. And so it's why we've seen, again, such rapid traction here. It's one of the reasons we've seen such rapid traction, is that people like the underlying technology. They see that it's advancing. They trust the Jupiter brand, but then at the end of the day, the math works. It's free money glitches. Like right now, as we record this, there's a multiply vault syrup USDC, which is like a yield bearing stablecoin, not exactly, but like one, and USDG. You get 33% APY on your stablecoins. It's amazing. Like who wouldn't want 33% on their stablecoins with minimal risk? And so, yeah, that's the explanation right now. It's largely through incentives.
Yeah, absolutely clear for now. Thank you. I like how easily you dealt with this shift from the funny cat topic narrative to this kind of a serious things. And that was pretty much for the intro episode, I would say, to build the general picture of what's going on. And I have a series of questions to maybe personally, if you don't mind. So,
Oh,
well,
I mean, depends on how personal they are, I suppose.
not too much personal, about opinions mostly. Well,
Let's do it. Let's do it.
Could you please tell us what Web3 industry development do you personally anticipate the most in the upcoming 12 months? This might be like positive for Jupiter, or just what you are expecting personally to happen.
I think that we're going to see. I'll speak mostly of Solana because that's where I have the most expertise. I think we're increasingly seeing market microstructure improvements that are putting performance on par with centralized exchanges, and in times even better than centralized exchanges. So the proprietary market makers that I mentioned earlier are a major part of that story. We're seeing incredibly tight spreads. You can now do a $10 to $100 million swap from Solana into USDC on chain with just a few bips of slippage. I think that's a really big deal. And even further, Solana is going to have a consensus mechanism upgrade in Q1 of next year. So whatever that is, 6 months from now, called Alpenglow, which should bring down finality down to 100 milliseconds. And certainly at 100 milliseconds, you're really competing very directly with the centralized exchanges, even though you're fully decentralized and on-chain. So I think what we're going to see is really an influx of capital on-chain, which is going to make all parts of DeFi, certainly Jupiter will benefit, but anyone who's on-chain and any DeFi protocols are going to benefit from that.
Get it. We'll be keeping an eye on. And since you started your Web3 journey back in 2016, which was a pretty early stage, and since you are connected with philosophy, could you please tell us what is the biggest misconception about the Web3 industry that you've debunked so far during this path?
That it is all scams, I think. Certainly the general impression is that it's only good for Ponzi's. And I think that the truth is more nuanced, which is that in crypto, there's something like maybe 100 interesting projects, and then there is something like 100,000 scams. So the nuance is that there are a lot of scams. It is not wrong to say that there are a lot of scams in crypto, but it is wrong to say that it is entirely scams. And so being firsthand in contact with so many founders and so many people who build in the space, and learning that money is actually not the motivation for a lot of the good project builders. And oftentimes, if money is the motivation, that's kind of how you know that they're here, but they could just as easily be in AI or biotech or whatever else. That there is an entire class of founders and builders and people who work in this space who are really committed to this idea of decentralized finance, of permissionless innovation, of on-chain identity, and so on and so forth. That was a major change.
Great. So also a little bit of philosophical approach towards this, and that's great because debunking the misconceptions, the misunderstanding of people is one of the main contributions, I would say, to the mass adoption everyone is speaking about. And yeah, thanks for making it happen a little bit faster with doing these kind of things. Well, and we came up to the last traditional part of our interviews. Could you please go ahead, address directly to our audience, and share some piece of advice, not financial, of course, or maybe some call to action, whatever you find useful for people to hear right now? Please take your time.
Yeah, I would say if you're watching this right now, when I first got interested in crypto, I spent a lot of time on the sidelines, feeling like I had to fully understand everything before I kind of started to, get involved and actually get on chain. And I think that was a mistake. And so, what I would encourage anyone who's watching this right now to know is the single best way to understand the value of crypto and why it is so cool is to actually go and use the products. It might only be with $10. If you go get Jupiter Mobile, you can on ramp funds using just your Apple Pay or Google Pay, and boom, you can start trying out different borrow lend protocols. You can use different launch pads. You can do trading. You can do NFTs, community development, SocialFi, whatever else it might be. Just get started and actually use it. Don't fall into this paralysis of analysis where you're just kind of reading and reading. Actually get your hands dirty. There's no faster way to learn.
Wow, thanks. A great ending and a really encouraging call to action. Completely agree with this. So you never know how it works until you try. The first steps are the most difficult, but when you just try, test something, you will just see that it's not that complicated as it might seem. Of course, there is a way to grow with the UX, UI, of course, terms, but still go try it. And it's not 2016 already. There is so much for the mass adoption being done. So yeah, once again, completely agree. And that's it for today. Thank you very much, Kash, for joining in. I know there is so much more you can speak about. I've seen some of your presentations with 40 plus slides about Jupiter, and I do hope to see you in more episodes digging deeper into the topics. So yeah, thank you.
Thanks so much for having me. I'd love to come back anytime.
Sound great. And of course, thanks for all viewers for watching till the end, guys. So to stay tuned, follow Kash on socials, follow Jupiter, follow Synopsis, of course, and see you in more episodes. Bye bye, everyone.